Don't tell me it's true. Don't tell me that the end is almost near. It's a new month. It's a new quarter. We got so many charts to go over. I see some very interesting things taking place in the market, and that's what I'm going to be sharing with you today. We're going to go over the main portion of the video. We're going to go into the risk ranges for next week, and we're going to dive into some crypto too as well. If you're new here, my name is Michael Silva. You're watching the Stock Market Brief Show. I use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. If you haven't done so already, make sure to hit that thumbs up button and subscribe to the channel. All right, everybody, welcome back. We are looking at the yields and the yield curves. First and foremost, I'm sure you're hearing it, so I'm not going to dig too deep into it. 10 and 2 inverted, 35 inverted. I want to just point out just how, steep that is. Bam, bam. They're moving at a very rapid rate into that inversion territory. And you can see we've been talking about it since, October of last year back over here, and you can see it was expansion, and now it's contracting very tightly up here as we're starting to get curves inverted, and that's never a good thing. Something is off. What is going to happen? Well, I don't know what's going to happen, but something is going to happen, right? This isn't normal market behavior. This is very, irregular to see take place. So understand that the 10 and 2 during inversion, if it stays down here 9-10 days, let's say, the power of a recession to come around the corner, the likelihood of it increases dramatically. So after every yield curve inversion, there has been a recession, whether that be 6 months, a year, or 2 years, we don't know, but it is a good indication that there could be very well a recession up ahead. So be mindful of that and be mindful of how fast the curve is inverted. If we take a look at the S&P 500 on a quarterly basis, right? It's a new quarter. Woo! The 30 and 5 spread closed for the first time inversion on a quarterly basis since 1999. Late 1999. And if you take a look here, what I found interesting, you don't need to put too much weight on it, but the price action. Look at this big pull, blew up to the upside, and then we had a hammer candle followed by another hammer candle. Right here, boom, big move to the upside, right? Everything's perfect, everything's fine, and then bam, a lot of volatility, a big hammer candle. Probably the same emotions here that took place, the same emotions that took place over here. You can see that just in a price chart. Now, are we going to get another hammer candle? Well, I wouldn't be shocked, right? It went pretty much sideways for 2 more quarters. And this was a very volatile quarter, which could indicate that we're just going to see some continued crazy price action, back and forth volatility. Or you never know, it could very well take out the low end of this quarter and then we could drop even harder. We'll see if that's the case. I'm not going to try to sit here and predict that. We're going to go over some more charts which indicate that we might be nearing a potential very strong top in the markets. Let's go ahead and take a look at TLT on the weekly basis. This is 20-plus year Treasury bond ETF. And I'm keying in on this volume shelf profile right here, 140. You can see a positive divergence there, a positive divergence there. You have the PO indicator, the histogram upticked right here. So you have a low and a lower low, and then you have a pretty bullish looking candle. So, they've been it's just been so volatile in the bond market. But to see a little pop or recovery this quarter, I'm thinking that, if you're trying to position yourself on a quarterly basis, there may be some, at least there's a good risk to reward trade here, because other people can look at this and say, hey, it's a head and shoulders and it's going to crack down and the bonds are going to, just blow up and then the yields are going to continue to rise. You can't rule that out, but a lot of the times these head and shoulder patterns don't even really work out, and we typically get some sort of move up and then maybe more, it could be anything crazy. All right. But as it stands right now, positive divergence, which signals what? It signals that momentum to the downside is weakening. So this was strong and this was strong, but you can see the low here and now it's putting in a higher low. So it tells me that it is weakening a little bit. Now this is where it gets interesting, everybody. Oil, take a look how volatile it is. Holy moly, down 12.84%. All right. Now this looks familiar, huh? Yeah, this was in the thumbnail. So this could very well be a topping type pattern. And what I found so interesting when I was looking at the weekly chart was, wow, that looks just like Jesse Livermore's accumulation cylinder, widening mouth. And this is his speculative chart of how, stocks go ping back and forth and then blow off and then all of a sudden see a bottom. But if you take a look here, it's very similar, and I marked off. So remember, so it goes 1, 2, 3, 4, 5, 6, 7, and then we blow off once, 8, huge move 9, and then a smaller move up 10, and then we start to fall. And there's some volume stuff you can look at here. I'm not going to dig too much into this. I'm by no means a professional of Jesse Livermore's work, but take a look here. Quick little overlay. You have the same amount of ping ponging around. So, you got your start 1, 2, 3, 4, 5, 6, 7, and then it blows off. And you could see here it's kind of going sideways. That would be my 8 marker. And then you have this huge, that was on the, right here was the Russia-Ukraine war that has been taking place. That just pushed oil significantly higher. And then the 10, it went a little bit higher, but then it reversed itself. And what I found interesting here was 10 came down all the way to here, right, on some strong volume. Okay, 10, 11, and then it came back up. That's 12, and 12 took place on some really small volume, and then it started selling off a little bit harder on more volume. So, it doesn't show the volume profile. Oh, actually, wait, no, I might have it here. So 11, let me see if I have it. Yeah, so remember 11 on the drop, it's typically increased volume, 12 is up. If I just pull this down, 11, volume up, 12, volume down. So, perhaps we might be getting a top in oil. And why is that important to know? Well, first and foremost, if oil is topping, when you look at stock market cycles, this is the orange is the stock market cycle, the blue is an economic cycle. Now we're getting those yield curves inverted. Okay, now first and foremost, energy typically is the top performer at a stock market top. So if oil, which is a huge driver in energy stocks, is starting to fall, is starting to come down, has hit its peak, which I'm not saying that it has. It could very well go higher. It very well could. But if it has hit its top, that means as we start to make the turn here, consumer staples, utilities, and healthcare start performing. And the more that these start performing better, it could indicate the top of an economic cycle, which makes sense because there is time from here and time from here. And typically when you get those yield curve inversions, you have a length in time before a possible early recession. Haha, sha-sha-sha-shoo. But let's take a look really quick deeper into these 4 sectors to see how they are performing. First and foremost, energy stocks. XLE, we're going to use that as the proxy. First and foremost, there is, I don't know if you want to call this a negative divergence on the XL. Well, definitely you can call it on the relative strength line. So let's call that out. The reason why I say you might not be able to call this a negative divergence here, I would say that it is, and the reason why is because we had closing candles here, and then we had a closing high here, but the wick did wick higher. So I'm going to call it a negative divergence until it's proven innocent, I guess, at this point. But you can see price action, it exploded in 2022. Hasn't really done anything since, but you can see it came down, or it blew up, pull back, nice consolidation, blew off again. Now you're starting to see the price action get a little bit looser, but it is tightening up here and within this pattern. So is there another leg higher here? I couldn't tell you. Honestly, markets, always throw people off, so I wouldn't be surprised to go boom, and then all of a sudden come back down and then trap more people in or something crazy like that if we did actually reach a top. But as it stands right now, it's still very well in bullish context, but the relative strength between XLE and the S&P 500 has put in a negative divergence. That's worth noting, and we're starting to see momentum slowing to the upside here too as well. That can very well change, but be very mindful of that because everyone right now is more focused on energy stocks than anything, and rightfully so, because it was the only performing sector in the S&P 500 for the quarter that was up. The only one. It's crazy sauce. Now, let's take a look at the other ones. XLU. Oh, XLU is performing very strong. Now, this has made a significant move already. So to see this consolidate at some point, would make sense to me. So this is not something that you necessarily want to just hop in and chase because of its aggressive move already. Now, I would prefer, like I said, I took trades in utilities. This is something that I shared in my Discord and on the market briefs too as well. It was just a clear move from expansion to expansion again. Now, I just want to wait to add by looking for some more contraction. Now, keep in mind too, if markets get hit you typically you'll get hit with everything across the board. If we do see some dramatic moves, utilities get hit, consumer staples get hit. But what's important to pay attention to is the relative strength line, because utilities get hit less typically than the overall broad market, so than the S&P 500. So you still might actually see, even if they go down, that the relative strength line increases. Let's continue on to consumer staples. Consumer staples has made just an aggressive move and is continuing to press higher here. This is an important note because the market has pulled back, but consumer staples continued moving higher. So that to me is showing some strength heading into Q2 of this quarter. So utilities is looking strong even at the beginning of the quarter. Consumer staples is looking strong even at the beginning of the quarter. Energy has been going sideways pretty much since the beginning of the quarter, which it's only been, well, I guess not even really. I go one trading day. So we need more time, right? But also, actually, to note on that, if you actually look at energy, since March, it actually hasn't really gone anywhere. So to be fair, there's that point. Now, let's go to XLV. So healthcare is another one that you typically see performing, and you can see here, moved up, pulled back, moved up higher. So it has not got hit like the stock market has, which means we had a little bit of an uptick here and a stronger start here in Q2 so far with healthcare too. And as I stated already on the stock market kind of, topping cycle here, where the top is energy, but then when you start moving this way down through the screen, you have consumer staples, healthcare, and utilities start to perform as the market starts to, get weaker. Okay, so those are my important key notes there. Now, let's go to a couple of very important sectors. And the reason why I want to show these is because if these aren't doing well, it's hard to get behind, the growth trade narrative, right? So semiconductors down 3.36 on the week, all right? Getting hit pretty hard. Not the greatest start to the quarter here so far, all right? And it's getting just held up at this area of kind of resistance here. So it could change if we can. I'm not ruling it out that we can't go higher, but as it stands right now, that was a overly aggressive type candle, right? It engulfed the previous week and it closed below the open and the close. So, it's pretty bearish overall. So we might still pull up a little bit more, but don't rule out that if we start taking out the low, which is 261.59, that we can't drop it even lower. So be mindful of that, because semiconductors make up a big portion of the Nasdaq, right? It's a huge component of the Nasdaq composite. And also you have big stocks like NVIDIA, right? NVIDIA is one of the mega cap stocks in the top 10 of the S&P 500. And then another one is transportation, right? If you want to know how good the economy is doing, you can use what's called Dow theory, where you take a look at the Dow Jones, you look at transportation, for another video, but down 3.5% on the week. But on yesterday's trading day, if you look at a daily chart, they got hit incredibly hard. So that is something also a little bit of a warning sign. Now, overall, you can see it's just within a channel right now. So right now it's just kind of in the middle. So it's just pinging back and forth. Now, if we start getting weekly closes below that 245, below that 240, that is where we need to be a little bit more concerning with transportation, as well as many other different sectors. Another chart that's has me, red flags in this market right now is the housing index. The housing index is incredibly important to keep an eye on, and the housing index can, it's been a great indicator of leading recessions too as well. If you actually look back in time, I'm not going to talk about it too much now, but you typically see the housing index peak before the stock market, and we saw it peak actually here in May of 2021, and the market started heading higher. And then you can see here, the market actually put in a new high. Meanwhile, the housing index couldn't even get past this high. Then we started to see massive volatility, and you can see here more recently, housing continues to get pounded down, and the S&P 500 ripped up. Now, we just had a couple of days of a pullback. I know people are going to start talking now about an inverse head and shoulders. All right, that's not out of the books, but just be mindful that housing, look at this bounce and look at housing's bounce. Tell me there's something not up. That is not a good, it was just a cruddy bounce. Now, after all that's said and done, let's take a look how in 2022, how the dollar's performing. The dollar has been doing better than the S&P 500. And meanwhile, also, the dollar's been rising and commodities have been rising too as well. So there's some interesting stuff taking place there. Now, the dollar is currently in this consolidation, And you can see expansion, now it's contracting. Okay, and you can even see the contraction in the Bollinger Bands as they're tightening up. So an explosive move in the dollar, it's not far away. Give it some time. It might happen soon, but give it some time, because remember, as Bollinger Bands contract, right? Contraction leads to expansion. Boom. Okay, contraction, expansion. You can see that there, contraction, expansion. All right. Now, if we do get an explosive move to the upside, we've been seeing many times where this acts like the negative correlation to the S&P 500. So an explosive move to the upside puts massive volatility in the market. You can see boom, explosive move, okay? That also goes with boom to the downside, explosive move to the upside, all right? But as it stands right now, this was an explosive move in the markets. The dollar hasn't really done anything. So during the period of consolidation, that's important to note. If we get an explosive move, is the S&P 500 going to be able to hold it together? Or are we going to get a steeper, deeper pullback and maybe something like that? I don't know, but it's something worth noting. During all of this, too, on top of this, okay, heading into this new quarter, this is all important stuff to pay attention to. So I hope you're listening. Gold has been doing rather well in 2022. It's outperforming, right? A lot of these indices, all the indices. And you can see here, boom, incredible run up. Now we're getting that pullback. It was down on the last trading day. Okay, pretty big, but overall it's been doing pretty good. So this could be a pullback to potentially move higher here. Now, if I take a look at the miners are telling a different story. They broke out. This is XME. That's what the proxy that I'm using. It's a metals and mining ETF. Huge move to the upside on the weekly. I was waiting for pullbacks, right? We got a little pullback here and a little pullback here. So we'll continue to watch and just monitor this in other various miners that do look very strong. But, we've already made aggressive move. We might need some more consolidation. Miners, they trade very different than most equities. They're a little bit more erratic in price action and a little bit more volatile, especially when they start picking up some movements. You can see them all right, everybody, welcome back. So we're going to take a look at the sailor to shift ratio. It is still on that buy signal. We're getting a little bit of price volatility. The buy signal was right here. We're moving up. Now we're getting a little choppy, right? Is it going to be able to hold up if the markets do start rolling over? I wish I had that answer for you, but as it stands right now, everything's looking good at this particular point in time. But, as the days go by, we get more data and we can do what we can with that data. Now, as we take a look at the daily time frame for Bitcoin, we are above the 20 and the 50, and they're starting to curl up. That's a positive sign. Bitcoin is showing relative strength to the S&P 500. That, too, is a positive sign. We broke out of this pattern, right? Could be a bad bottoming pattern. That is a good sign. We bounced right here. That is a good sign. So we will see here now if that can actually hold, which is about 44,000. That comes down, then we got to see if these moving averages can hold. As of right now, things are looking good, but just be mindful that, if we start taking out some, potentially this trend line below us or these lows here, that's where things can get a little wacky and wonky. But as it stands right now, we're just consolidating, pulling back after a strong move right under that 200-day moving average. It's going to be really nice to see the bulls recapture that 200-day moving average, which is floating at just about, just above 48,000. Ethereum, very similar story. This one actually looks stronger. A huge move in Ethereum. So in the short term, definitely bullish trends, up, down, little pullback, up, little pullback, up, little pullback, up. So it is looking very strong here. It's trying to break through that 200-day moving average right now. So as it stands right now, I'm not running into Ethereum. I prefer to see a pullback in Ethereum to get into Ethereum as well. As it stands at this particular point in time, I'm in Bitcoin. But I will say, even looking at the relative strength line in Ethereum, that's also upticking as well. So Ethereum looks like the stronger play here at this particular point in time. Now it's time to get into the indices. And we're going to talk about those risk ranges. We're also going to look at the weekly time frames. Let's start with the S&P 500. Okay, so first and foremost, where did the S&P 500 finish for the week? It didn't even move, right? We opened and closed in pretty much the same exact area. Now, we did have a strong move to the upside, and we reversed it completely. Now, this candle does not look too good. So if we start taking out the low, 45.07, that can put us obviously to head lower. Now, where lower can we head if we start taking that out? Let's take a look at the risk ranges, okay? So the risk ranges, the low end is just above 445. Now, you can see here the light dashed lines are last week, and the The thicker lines are this week's risk range. If you don't know what that is, or you don't know what the expected move is, I made a video on it. I'll link it in the description for you. The price action on Friday, nice hammer candle. So, would you be shocked to see if it gets above the high, which is 453.46, to start moving higher and potentially go tag the upper risk range, which is just above 460? Sure, that's absolutely possible, but if we start taking out the low of this candle, I would say that we're going to go test that 200-day moving average and the lower risk range. So those are a couple of levels that I'm watching. Understand that even though we have a smaller risk range, still expect to see volatility at this given time, okay? If we take a look at the Nasdaq 100, look at that. Oh man, nasty on the weekly time frame. So this to me literally just looks like a back test. Okay, so it came up, boom, it's been choppy. This could be very well a bear market rally, a strong one, and now we're starting to see that weakness. So if we start taking out the low, which is 14,705 on the NDX, Nasdaq 100, that could just set us up for a reversal type pattern, right? If we get a red candle on the weekly time frame like this, that would be an evening star reversal type pattern, and then you got to get a confirmation below that, and it could head lower, okay? So be on the lookout for that, because the start of the quarter so far, it's a little wishy-washy, and how we kind of led into this new quarter, it's a little wishy-washy. And remember the saying, right? In May, sell in May and go away. We still got a month to get there, but it's something to be mindful of as we tag the 30 and 40 weekly moving averages. They're starting to curl down, and you can see here clearly held as a level of resistance. If we look at the daily time frame, risk range has shrunk a little bit. Very similar type price action, right? I mean, this move was very strong. It tagged the upper risk range to pretty much a T, right? It came just above it slightly and then started reversing, right? That's what we talked about. So now let's see if it tags it again. It might try to make another run. We have a nice little hammer candle. If it takes out the high, we can go higher and try it out again, right? And then people are going to start talking more and more about those inverse head and shoulders. So we need to be very mindful of that. If we take out the low, I think we tag the lower risk range. Once we get more data, we'll talk more in depth there. Let's take a look at the IWM here quickly. So the 30 and 40 week moving average is still declining. You can see nice big strong move, and it got reversed to just basically finish slightly up on the week. You can see the PMO is starting to curl itself over. Now that to me is kind of interesting. We'll see if that can hold. It is below zero, so that throws a little bit more caution out there. As it stands to me, this literally looks like it's just a successful back test of breaking down. So if we start getting below the low of that week, 203.03, yeah, we can head right back down to, previous lows there. So be aware of that. But as it stands right now, yeah, we had a nice rally, and now we need a little bit more data to confirm what's going to be taking place next. If we take a look at the risk ranges here, the expected moves, we tagged the upper edge perfectly last week. And, we talked about that, and we started selling off. And then on the last day of the trading week, we moved up a little bit. All right. Now, where can we potentially go? Well, I mean, it's looking at these ranges, it looks like we're going to stay within the range, right? 68% of the time, it's going to close. Price is going to close within that risk range. Sorry, this risk range right here. So we'll see if that's the case. Now on the upper edge, that's previous resistance, resistance, resistance. On the lower edge, well, you have pretty much the 20-day and the 50-day moving averages. So I think that we're going to be tagging one of these ranges, or one of these upper or lower ranges early in the week. So if that is the case on this product or any other product at that matter, be mindful of when that does take place. All right, everybody. Let's just wrap this up now. That's all I got for you on today's show. Like I've already stated, there are some very interesting things taking place in the market. I don't think that this is action where you need to just, do something crazy right away. It's more of me just bringing to your attention that during these stock market topping cycles, you do see energy as a strong performer. And then while we make the turn, you typically see these ones perform stronger. We see the yield curves inverting. We're starting to see strength in these sectors rolling into Q2. We're starting to see strength in gold miners, right? It all tells me that we're coming into a very interesting time as yields are inverting, as defensive names are performing well, as energy potentially, or even oil, is putting in potentially. That was a blow off top. I don't know if it's going to head higher or not. I mean, looking around, I would never want to rule that one out, but there's just some interesting things going on. I hope this gave you some insight, whether you're bullish, whether you're bearish, at least you potentially got something from today's video. See you later, everybody.